Back in June, US Congress was afraid of a Chinese Treasury dump. They were afraid that China would start selling away their stash of US bonds. And it's not a small sum, it's nearly $860 billion worth. China investing in US debt is basically a vote of confidence that Beijing sees a future with Washington. If they keep buying American bonds, it means their interests are tied closely together with the US economy. That's why we saw a boatload of US diplomats, politicians, all flying to Beijing to salvage the situation. We had Blinken visiting the country. Janet Yellen, the US Treasury itself, flew to China to restore relations. And in a really bizarre twist, Henry Kissinger, at 100 years old, paid a visit to President Xi. Why is America scrambling to resume dialogue with China? It's because the beating heart of the US economy, the Treasury market, is moving towards a sovereign debt crisis. Basically, America's borrowing too much money and they can't afford to let their second biggest financier run away. If China keeps dumping treasuries, this is going to put upwards pressure on bond yields, which is bad for the US economy. Remember that the treasury market is facing a trifecta of storms. We have Janet Yellen selling tons of bonds to bankroll the US government. She's trying to borrow over $1 trillion to keep the game going. Then the Federal Reserve is deleveraging their balance sheet to fight inflation. Jerome Powell is getting rid of the Fed's Treasury holdings to suck money out of the system. Plus, we have the upcoming rate hike in July that 99% of traders are anticipating will happen. The entire market is already agreeing that interest rates are going higher. Now, you quickly understand why China's Treasury dump is a serious threat that places more pressure on all the bond yields. In the latest Treasury report, China is still dumping their treasuries. We can see that in May, Chinese bond holdings dropped from $869 billion down to $846 billion. That's a $23 billion sale of US debt. Now, if we zoom out and compare it to 12 months back, we can see how bad this deleveraging really is. China has sold more than $100 billion worth of US treasuries. We have hit a 13-year low. And this should send alarm bells ringing in Washington because this is a one-way trajectory down. We are seeing trust between the world's two biggest economies evaporate, and this will have severe consequences for the entire world. So why is Beijing starting to sell its holdings? After all, if you think about this logically, China will be losing quite a bit of benefits, at least on paper. We know that the Fed rate hikes are nearing their end. They could hike another 25 or 50 basis points, maybe a max till 6%. But sooner or later, the Federal Reserve is going to drop rates and whatever losses incurred are going to reverse. Plus, if you don't buy treasuries today, you are missing out on some of the highest bond yields in the world, and that's fixed income in the world reserve currency. And this tells us that China doesn't really care about short term financial gain. They are looking 10, 20, or even 30 years into the future. What if US China relations worsen? What if they sanction away our dollars? Now, these are clear and present dangers that they have to address. And the issue is the location of China's treasury holdings. Remember that $846 billion, it is held by US-based custodians and broker-dealers. And that means China's stash of bonds is floating somewhere in American banks and dealers. If an economic war breaks out, all America has to do is to issue an order, and all of China's treasury holdings would be immediately frozen. And this is some incredible counterparty risk. But if you think China only has $800 billion at risk, then you have to think again. If we add in the treasury holdings of Hong Kong, which is part of China, we see a much different story. In green color, we have China plus Hong Kong's holdings of US bonds. Collectively, they hold almost $1.1 trillion worth. And what's more interesting is the direction of those holdings. As a whole, China and Hong Kong are deleveraging their bond positions, but Hong Kong isn't selling much yet. So there's still room for more selling if Beijing decides to pressure them to sell as well. In a recent article, former Treasury Secretary Larry Summers made a statement about using Russia's frozen assets to rebuild Ukraine. And according to the piece, bank robbers should not expect banks to honor their safe deposit boxes. Basically, if your money is in a Western financial system, if it is in a bank, there is some ownership risk. Then you have US senators launching a bill to seize and transfer Russian assets to Ukraine. So you get a perfect storm for China to really freak out. If China's money gets frozen, this will deal a big blow that will hurt Beijing more than Russia, at least in the short term. You see, China imports a lot of commodities like oil, gas, and wheat from the world, right? And because these commodities are priced in dollars, if America confiscates away China's dollar assets, they have effectively cut away vital imports to China. And they will force China to print money. They have to print more Chinese yuan to replenish their US dollars for the short term. And that will lead to higher inflation and massive instability in the country. So it makes total sense why China is de-dollarizing now while there's still some time. So if you're China, you're caught in a deadly dilemma. On one hand, you need to keep bringing US dollars from your exporters to keep your currency low, right? You need to remain as a competitive exporter. You also want to have some dollars on hand to buy imports just in case America sanctions you tomorrow. But on the other hand, you can't keep all your eggs in one basket. Buying US Treasuries held in US banks is a very risky proposition. One wrong move and it could all vanish into thin air. However, there's also another problem with buying US Treasuries. China will be in fact financing their adversaries, and that means subsidizing Wall Street and powering the American war machine. Now, every time China buys US bonds, they are participating in America's deficit spending, and obviously, this isn't an ideal situation for the Chinese. And to circumvent this, China has diversified how they invest their dollar reserves. And the first is something that we already know very well, and that is buying gold, lots of gold. Now, pulling up a story from Bloomberg, China's central bank boosts gold reserves for 8 straight months. Their holdings have risen by 23 tons in June to over 2,300 tons in total. But we have to suspect that figure because it's likely to be magnitudes larger. China is the world's largest producer of gold, exporting bullion out of the country is extremely difficult. I believe their gold reserves are much higher. They are just concealing the truth. However, if we do some calculations, we can see that the People's Bank of China is aggressively buying more gold than many other central banks. In June, China's foreign currency reserves reached nearly $3.2 trillion, and that's $16.5 billion higher than the month before. And how much gold did China buy again? They bought 23 tons or 680,000 troy ounces, and that is equivalent to $1.36 billion worth of gold. That's more than 8% of excess money channeled to gold in June alone. China is piling on more gold bullion because they need to buy an asset that gains in value. And one big question I get often is why doesn't China convert their dollars to the currencies of the BRICS members, right? Well, it's because their currencies are just too unstable. If we compare the US dollar against the BRICS currencies, we can see an interesting trend. Over the past 12 months, the rupee, the ruble, and the South African rand all fell against the dollar. That's because the Fed rate hikes channels the flow of money from emerging market currencies to the US dollar. So the majority of the world's currencies are falling against the dollar. And the only currency that has appreciated versus the dollar is the Brazilian real, which is up by incredible 13%. And as a central bank, you're supposed to protect against currency volatility. You're not a trading house, you're not a Wall Street bank. So capital preservation is number one. That's why China is diversifying into gold. Over the long term, gold appreciates against the dollar. It has gone from under $40 an ounce to nearly $2,000 in 50 years, and that's a 50-fold increase. So if it's dangerous to buy dollar-denominated assets, the only choice left is gold. It is just as liquid as treasuries. There aren't many options left to store your purchasing power. Plus, you definitely can't stay in cash because of inflation, right? And the second way China uses their dollars is to invest worldwide. Instead of just buying gold, China is taking an offensive approach to their investing. China prefers to invest their dollars in projects and initiatives within the BRI, the Belt Road Initiative. Now, Beijing does this because it accomplishes two strategic objectives. It allows them to put their dollars to work and gain a return. That's the most obvious one. But it also allows them to shape a new global order. This is a strategy to create a new world economy outside of the West. Now, once you understand this, you'll realize how China is reversing the tables on the US itself by using the dollar. And here's how this works. China's central bank, the PBOC, funds the country's development banks. And this includes the China Development Bank, the Export-Import Bank of China. They pump them full of US dollars. And these development banks then aggressively lend out the money to fund projects involved in the Belt Road Initiative. And this can be railways, bridges, or power stations in countries like Sri Lanka, Saudi Arabia, and Kazakhstan. Remember that the loans are mainly denominated in US dollars. In fact, from 2013 to 2019, the China Development Bank financed over $190 billion across 600 BRI projects. That's how much money China is funneling away from Western markets into all the emerging economies. Now, investing in emerging markets isn't a stable affair. There's always a chance, there's always a risk that you won't get your money back. The default risk there is much higher than instruments like bonds and gold. So, why is China doing this? Because it's a powerful diplomatic and economic tool. China's building long term relationships and winning over allies. They aren't just focused on the immediate returns. And a big part of China's lending is to the African continent. Now, these are countries approaching China for loans and not really the other way around. And when these countries can't pay, Beijing actually does forgive the debt. Back in 2022, China actually forgave 23 interest free loans to 17 African nations. In addition, they provided $10 billion in IMF funds, their own IMF reserves, to the continent. And you might think that's a crazy proposition, but China is playing the long game. They know Africa needs to build up their infrastructure, and helping them develop their economies is a win win strategy. China would rather spend their own money than let Africa take a loan from the IMF directly. Because if you didn't know by now, taking money from the IMF is signing a deal with the devil. If you take money from them, there are a ton of conditions that you need to adhere to. This includes high interest rates, trade liberalization, and opening capital markets. Basically, you surrender your economy to the West. Now, China, of course, wants to defend against that because their ultimate aim is to de-dollarize the world, is to de-dollarize their trade. They want Africa and the entire BRI to trade using the Chinese yuan. So they are in an epic lending struggle with the IMF. And this is why China is lending so aggressively to emerging economies. This is the hidden agenda that not many people are talking about. So essentially, China is using their US dollar holdings to build up emerging markets up to the point that one day they will encourage them to embrace bilateral trade using the yuan. And this isn't a 5 or 10-year plan, it's a 50-year and 100-year strategy. Now, the repercussions of China moving away from treasuries are huge. It starts off as a trickle and turns into a tsunami over time. Now, China isn't just diversifying away their own assets, they are creating the conditions for global de-dollarization to really happen. They are trying to lower global demand for treasuries, especially across the BRICS nations and emerging economies. But what the United States is doing isn't helping the situation either. And I want us to take a careful look at these next two charts very carefully. Here's a chart of US Treasuries held by all countries, and focus on the line in red. We can see that the world's treasury holdings have gradually risen over the past decade from $5 trillion to $7.5 trillion today. And over the past 2 years, it has fallen by a bit, but it is otherwise staying just stagnant. But this next graph tells us that the main reason why the dollar is in trouble has nothing much to do with China. It's America's own fault. And this is a chart of the amount of US treasuries held by foreign countries. We can see immediately a disturbing trend. Even though the world is holding more US treasuries, the percentage held by foreign nations is dropping. It has dropped from 33% to under 24%. In other words, America is self-funding more of their debt. And normally this isn't much of a problem if you're fiscally responsible and spend within your means, right? But that isn't the case, we all know that. Just 1 month after Congress suspended the debt ceiling, the US national debt has ballooned up to $32.3 trillion. It has increased by nearly $1 trillion more. And as we speak, it is probably much more now. But a big culprit that will doom the dollar isn't really China, it isn't Russia, it's the Federal Reserve. Every time the economy gets into trouble, Powell and his merry men step in and they buy up US treasuries to push down all the bond yields. You can see that back in 2010 and 2020, in order to stimulate the economy, the Fed went in and they bought up trillions of US treasuries. Even today, the Fed still owns over $5 trillion worth of US bonds. And that is a problem because you are just increasing the money supply without creating any value. The Fed isn't expanding the food supply, they are not increasing the oil reserves, and they aren't adding any value to the economy. They are just creating money to prop up the system. And as countries start holding fewer treasuries, inflation is going to strike local Americans harder. More dollars will circulate within the US itself. especially when deficit spending isn't stopping anytime soon. So this situation is going to get from bad to worse as the national debt grows. According to Bloomberg, US racks up $652 billion in debt costs as rates hit an 11-year high. So the cost of servicing the national debt is starting to rise, but it gets worse. The US budget gap has also widened by 170% in the first 9 months compared to last year. So you have to pay more interest on the national debt while you are increasing your deficit spending at the same time. And this is a recipe for disaster, guys. And no matter how you look at it, even if you take away the threat of sanctions, there's still an enormous default risk that is slowly building. And over 40 nations are now looking to join the BRICS. And this just increases the odds of more countries gradually moving away from the dollar. And remember that when more bilateral trade is conducted in national currencies, there's less incentive to stockpile US Treasuries. And this in turn forces America into a very difficult position. Either they cut down their deficit spending and restore confidence in the dollar, or they keep borrowing as much as they can right now until the debt market implodes. So, what China is doing is simply defending their own national interests. As America looks to de-risk from China's economy, Beijing is also moving to de-risk their reserves from the US capital markets, right? And this sell-off isn't going to stop. But let me know what you think in the comments below. Will China's treasury dump continue? Or did Yellen manage to convince China to do a U-turn? Let me know in the comments below. Stay safe, be sure to smash the like button and subscribe as we navigate through these crazy times.